Calling all bears, calling all bears. Be on the lookout for a death cross. It's happening again, folks, for the first time in over 3 years. The infamous death cross just triggered on the S&P 500. That's a signal that came before major downturns back in 1929, the recession of 2008, and most recently, a 27% drop in 2022. Now, uncertainty is in the air as the fear and greed index is tilted strongly to the left, indicating that nervousness is at multi-year highs. And this also comes as the market is teetering on bearish territory, closing down 20% from its highs, while investors flee to assets like gold. Check out this chart. Spot price gold making new all-time highs as we speak. So there is a lot of fear in the air. But in 2025, is the death cross really a doomsday signal that it's made out to be? Stick around, because after we unpack this pattern, I'm going to show you a practical option strategy to take advantage of this opportunity, and one that I am batting 1,000 with this year. Hey, Tom here. Welcome to the trading room for another edition of Patterns and Profits. Today, we're diving into a pattern everyone's talking about right now, the death cross. So I want to break down what this is, its frequency and key patterns, and most importantly, how we can profit from it. So let's talk about the death cross for a moment as I blow up my chart here. This is a daily chart of the S&P 500. And what I have on here is both the 50-day moving average and the 200-day moving average. Now, next to that, I got a big blue arrow, and that shows where the 50-day moving average is now crossing below the 200-day moving average. It actually did it on April 14th. Now, why is this important? Well, because it signals the beginning of several notable bear markets like 1929, 2008, 2022, and it came right before many significant pullbacks in the market. But it also had a lot of misses too. And that's something that pundits that love this indicator seem to ignore. Returns after a death cross are mixed in the short term, especially the first month. But outside of a recession, they actually lean bullish when you look out 3 months, 6 months, 1 year. Let me show you what I'm talking about here. So this table just next to me is the S&P 500 performance after the last 20 death crosses. What you're going to see here is there is a lot of green on the screen, all right? So it begs the question, how effective is the death cross? Well, the summary at the bottom down here, that says it all. I'm going to read it out to you here real quickly. 75% of the time, we're up an average of 4.7% after 3 months. Now, 80% of the time, we're up an average of 9.5% in a year. It's important to know that, but you know what this chart doesn't show me? It doesn't show me maximum drawdowns. So I went in and checked, and the key findings are that half the time, the major drops associated with the death cross came before the signal triggered, meaning that the lows were already in. Check this out. Here, and I call this traders, not investors, 2 months later, just 2 months later, we can see the drawdowns. Max drawdowns back in 2007, we had a 14.44% max drawdown. In 2018, December 2018, 10.88% drawdown. But most of the time, the drawdowns were not significant. And the 45-day gain on average was much, much higher. That's more likely that the signal's going to be more delayed rather than a shift to a warning. Now, let's talk seasonals, because you know me, I'm a seasonal pattern trader. We're entering, believe it or not, a seasonally bullish period. Now, I know a lot of you have probably heard the term sell in May and go away, but honestly, 8 of the last 10 Aprils and 9 of the last 10 Mays, the S&P actually ended higher. Check this out. This is my money calendar. And on the money calendar, we see a lot of popular stocks that are basically green throughout the month. This table right here is the S&P 500, and it shows where the S&P 500 moves up 1 1/3%, 1.61% in the next 30 days. 1.38 for April, 1.16 for May, 90% of the time. What does this basically tell me? It confirms that the money calendar with these popular stocks are confirming that the S&P likes to go up in April and May. And it also confirms to me that selling May and go away may not be the right thing to do. So now it's time to talk options. So what can we do as option traders with this information that we have in our hands? Now, we could buy the stock. That's one thing we could do. All right. It has large rewards, large risk, but it doesn't have any real probability. We could buy call options. They have larger risks, large rewards. They have small risks. But here's the problem with calls, especially now. With premiums so expensive, you end up with negative statistical probability. That means that time is not on your side. I like this strategy right here. I like selling puts because although they have large risks, they also can have large rewards if we're assigned. But the best thing I like about this is positive statistical probability, folks. I mean, take a look at how we create what I call an STO put option trade. That's a sell to open. We are selling something we don't own. We're selling an option to, again, take premium in. Now, we could be obligated to get the SPY, for instance, but we could obligate ourselves at any price below where it is now. I love getting paid to potentially buy something lower than it is today. That's called cash secure put selling. It's one of the highest probabilities out there that's designed to create wealth. So how effective is this strategy? Well, I'm going to show you. This is my published returns for 2025. If you look over here to the right-hand side, you see all those win, 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 and it goes on and on and on. All right, for 2025, I've roughly had about one trade a week. All right, my Q1 returns, 12 published trades. 11 were tradable, one was not. Of the 11 that were tradable, all 11 were winners in 2025. I do not have any losers so far with this particular strategy. So to recap, although the death cross often carries crazy headlines, deeper analysis shows that repeatable patterns will let us profit from the volatility. Thanks for watching. If you found this helpful, hit the like button, share your thoughts and comments below. I appreciate hearing them. And if you want to see more of this stuff, then head on over to patternsandprofits.com. I've got a link for you below. See you on the next one.